Hello, twins, and today we're talking about value stocks. That's right, value stocks that you can buy in a recession. Now, as a reminder, this is only informational and for entertainment purposes only. So, with that, let's get this party started.
Well, Nicole, before we get started, if you haven't done so yet, make sure you click the link from Mumu below and get yourself 15 free stocks when you fund your account. And with that, let's jump into it. Now, Nicole,
All
the
right.
first stock I'm going to pick is Procter and Gamble. Now, I know a lot of people say, "Oh, that's a typical value stock," but I'm going to tell you the reason why I picked this one. Procter and
OPNG.
Gamble is a consumer staple stock. Now you use their products all the time. They make Tide, they make Charmin, they
I want to say
make
Pampers.
NyQuil. Yeah, they make Pampers too, and they make NyQuil. I know NyQuil is coming up in the news right now because people are cooking chicken and NyQuil. I don't understand why. Please stop that. But this is a dividend king. Procter and Gamble has been raising its dividend for the past 66 years. Also, if you're going into a recession, people don't cut back on these goods. Procter and Gamble is a good company. It's been around for a long, long time, and I don't see it going anywhere, especially in a recession. People are not going to pull back on the goods that they use because these are comfortable goods that they're used to using and they want to keep them in their house. It gives them some familiarity, and you're not changing them up like that. Especially if you get sick, you're not going to get some knockoff brand of NyQuil. You're going to get the actual NyQuil so you can feel better quickly.
True that, true that.
That's my reason. So right now, Procter and Gamble is trading at 135.58 and it's off of 52 range high of 165.35. This doesn't move around like that. This is a pretty stable stock. Now it can go down because the market is going down. But if you're looking for something that's pretty stable, especially when you're going into recession potentially, you can also get a dividend off of this stock. So you don't have to worry about just the price going up and down. You're getting paid just to hold this stock. Nicole, up to you.
Now, if Nadia is talking about dividend plays, I guess I'm gonna follow up that with another dividend play. Maybe something that maybe some people might not even think about as a dividend play. The stock I'm talking about is Verizon. Now, we made a
Mm.
previous video when we told you why we didn't like AT&T, but let me tell you why I like Verizon. Verizon's in the same space as AT&T, but Verizon has raised its dividend for the last 16 years. Now, right now, the dividend is around 6.6% annually, which is a great dividend play, especially when we're in a recession. Verizon right now is trading around $39 and has been trading. This is the lowest price it's been trading in over a decade.
Mm.
So, not only can you get this at the lowest price that's been in a decade, you can also get it with a higher dividend than it's had in a decade. So, I like Verizon as a dividend play, even though it has some trouble collecting customers and it has some trouble with the 5G. But I believe once the 5G networks get sorted out and people start paying their bills on time when it comes to cell phones, I think Verizon has a chance of going up in value. But I'm not really buying this as a way to make money on the price going up. I would like to buy this as a dividend play.
All right. So next up, I'm going to give you PepsiCo. Now, whenever I say PepsiCo, I think of that song PopsiCo, but don't mind me. Anyway, so I'm
Okay.
going to tell you why. PepsiCo makes two out of the top four sodas that Americans drink. They have
Let
Pepsi.
me guess which one of the sodas.
Okay, I'll give guess the last one.
Sprite. Do they own Sprite? I'm not
I
sure.
don't know. But I know the other one is Mountain Dew. You wouldn't believe how many people drink Mountain Dew. Anyway, Pepsi is also a dividend king. You see where we're going here? If we're going into recession and you're thinking about investing, you might as well get a dividend too to help you offset some losses if you have to sell, right? So if you're looking at these stocks, they're dividend kings. Pepsi had just got into the dividend king status this year. It has raised its dividend for the 50th consecutive year in a row.
Well, maybe
Okay.
we should tell people what a dividend king is. There's dividend aristocrats and there's dividend kings. A dividend king is a company that has raised its dividends for the last 50 years, at least 50 years. It's different from a dividend aristocrat. A dividend aristocrat is a company that has raised its dividend for the last 25 years at least.
Now, going back to Pepsi, Pepsi has made it a goal since 2019 to start cutting costs, and they have a goal of $1 billion to cut costs and increase productivity. They're planning on cutting these costs up into 2023. They have met this goal every year. And I like this because Pepsi is trying to say just because we're a big company, it doesn't mean that we can't be more productive, more agile, and be able to move like a smaller company. And we have to make sure that we're giving the best to our stakeholders. What they're doing with this cost cutting, the money that they're saving, they're investing it back into the company. And one of the ways they're doing that is they're finding out ways of how they can be more sustainable. When we're going into the future, these big companies have to make sure that they're doing their part when it comes to taking care of the environment. Pepsi makes a lot of brands that you may not be familiar that they're under the Pepsi brand. For instance, did you know Lay's is under there? Gatorade, Tostitos, Sabra hummus. Pepsi makes all of these products. So they're
Hmm.
working with farmers in the Midwest to make sure that they're practicing agricultural practices that are more sustainable when they're moving forward. This is a great thing in my eye, on top of it being a dividend play. Right now, Pepsi is trading at $168.52. That's off of its 52-week high of 181.07. Like I said, these are not stocks that are going to move up and down in a crazy way. These are stable stocks that you can get in your portfolio and also have a dividend that has been increasing. This is what you want in a recession. I'm not saying we're in a recession now, but it looks like that could happen. So these are things that you want to help protect your portfolio and make sure your money is staying safe. And these are the type of stocks you will like in your portfolio to help you do that.
Now, this last one we're going to talk about today, I might have to, share a little secret, guys, because I'm gonna break out the glasses. Because tell you the truth, I'm trying to figure out, and maybe it's because I just haven't been, looking so clearly. I'm trying to figure out what my last stop, which is Costco. Why is that thing going all over the place?
Mm,
Now, right now, Costco. Last time I checked, it was trading at $467 per share, and that's off its 52-week high of over $600.
mm.
Now, Costco just came out with its earnings, and actually, it tells about its earnings every month. So it's not really a surprise as to what the earnings will be. But they did come up with their final earnings for the quarter, and they show that they beat the earnings that was expected. On top of that, they have been gaining membership. They have not raised the prices of their membership, but they're getting more people in the doors. However, this stock is getting beat up because people are fearing a recession. Also, because analysts in the market feels that this company is being too nice because they haven't raised their membership prices and they have too small of margins because of it. Costco is dealing with higher costs in terms of wages and also transportation costs.
Costco makes most of its money from their membership prices. Okay. So I think it's great that they're not raising their membership, but they have a steady stream of people coming in and new people joining Costco.
Now, the reason I put on these glasses too, because I think Costco is just a great company. I'm a loyal customer, and most people who become Costco members are loyal customers. And don't just take my word for it as Costco being a good company. Charlie Munger, that is Warren Buffett's right hand man at Berkshire Hathaway, another investing genius. He says that Costco is a great company. And on top of that, if Costco decides another way they can make money is to really put their foot into e-commerce and online.
Mm,
And they really haven't really done much. But when they do, and if they do, Charlie Munger says they can become a titan. So he's saying like they can become like Amazon if they really focus on growing revenue through their e-commerce line. Now,
yep.
as of 2021, they grew their e-commerce line in terms of revenue 44% over the year prior. So if they
Mm.
really wanted to focus on that, I think that's a place where even if you don't raise membership, they can get more revenue than that. Outside of raising membership, another way that I think they're doing a great business model and they can still get more money is through their gas and through their travel. So, what I mean by this, I've seen lines around the corner for Costco gas stations.
Yes.
I know a lot of people who will drive out their way to go to Costco because the gas is cheaper and it's a high quality gas than what you will find many other places. In terms of travel, I did not realize this until I started traveling recently how good of a deal you can get by using Costco travel services. I'm talking about rental cars and hotels. Before, it was never in my plan to look at Costco. I never
Mm.
even thought about it when it came to traveling. But now it's the first place I look because they have such good deals on cars and hotels. If more people find out about their travel deals, I think they have a great shot of making more money in that area too. So I believe Costco is a great deal. And on top of that, they do pay a dividend. So this is a company I don't expect to be shooting way up like a growth company. But I do think this is a low price right now. And if you can get in at this point and receive that dividend, I think it's a good deal.
I think the analysts are just hating on Costco. They're beating the expectations. They're not raising prices. What else do you want them to do? Don't hate. Parking lot is always full. and I'm still going to be the Costco. If you are a Costco member, you're
Maybe
not
they
going to
think good guys
BJ's.
finish last. I don't know. I just don't get it.
If you like what we shared in this video, make sure you subscribe to our channel and hit that notification bell so you don't miss when we're posting next.
Don't forget to use our link below to start using Moomoo to trade stocks and ETFs.